So welcome to another RigER webinar that we host every Thursday here at RigER. And today's a very special one because we would like to present to our guests and audience a partner of ours and a guest speaker on the topic today. But first, let me start with the main topic. So what we're going to be talking today is inventory counting, and generally speaking, oilfield assets management and tracking and counting being part of that process. So today's agenda and the presenters. So first and foremost, let me introduce you to Stephen Haskell, CEO of the OFS Inventory-X, the company that is focused specifically on the oilfield services, rentals assets counting. So Stephen will be able to give a quick intro of himself in a few seconds. And the second speaker of today's presentation and the webinar is Michael Maltsev, CEO of RigER. So whom those of you who have been to our webinars before know pretty well. And if you're a client of ours, you even met him. So lucky you are. So today's agenda is, and you see a few topics right there listed. So we'll talk about the inventory counting service. We'll talk about the periodic cycle counting in RigER, and we'll also touch on the best practices. There will be more packed into the 3 line items. So we're excited to get started. So without further ado, let me introduce you to Stephen Haskell, who will give you a quick overview of who he is and what his company does. Go ahead, Stephen.
Thank you, Nikolai. Good afternoon, all. I'm Stephen Haskell, the founder of OFS Inventory-X. Very good partners with RigER. Very happy to be here. Hope everyone's having a great day. Just to go over what OFS Inventory-X is, we started back in 2020 after many years of experience in the oil field and seeing improper physical counts and inventory and asset data collection being performed, whether it's on location in the motor shop and the yards. We just want to provide oil field service companies throughout the United States with clean and accurate asset inventory counts for your RigER software and your financial statements. We have performed asset inventory counts for forms in Midland, Houston, San Antonio, Dallas, Oklahoma City, Lafayette, Corpus Christi. We also have the ability to travel to places such as Denver, North Dakota, Pennsylvania. We just like to go to where companies are located and have remote locations and save them money at these facilities. Our services include, here's a brief list of our services that we help companies save time, money, and resources. We perform on-site physical asset inventory counts. We find missing assets. One way about doing this is to visit remote locations, go to vendor facilities. We also clean up asset inventory data. We always like to say good data in, good data out, bad data in, bad data out, as we all probably know. And we like to make sure that companies have the right data when it comes to their operations. We also assist companies when it comes to master asset list creation. And this helps out companies prepare for potentially selling divisions, selling batches of assets that are no longer needed, even assistance in obtaining asset-based loans, which is very popular right now. We're living in an economy where companies need to be creative, and the only way to do that is to start with clean data about what your business assets look like, right? One of the ways we differentiate ourselves when it comes to the normal accounting and auditory service companies is our years of uncommon assets. Oil field is so drastically unique compared to other industries. It is exponentially beneficial for companies to trust companies like OFS with their inventory and asset management to ensure that this equipment and assets are not overlooked by the untrained auditor. And also, we like to assist companies, CPAs, financial institutions, and capital investment firms with our specific oil field experience to advise about asset and company valuations. All of these services we perform impact things like mergers and acquisitions, consolidations, bankruptcies, year-end financials, operational capacity of businesses, asset-based lending, asset disposal and liquidation, and asset life cycle consulting. I appreciate it. All right, let's go to the next slide, please. Thank you so much. All right. It's always good to first define what asset management is when we go over these benefits and pitfalls. Asset management, in a sense, is a way a business monitors its own assets and track and analyze issues such as physical location, maintenance requirements, depreciation, performance, and eventual disposal of the assets. And this also includes tracking third-party assets, their maintenance, rental, and repair in companies. And you'll see later, and most of us already know that RigER does a great job of the management of internal and third-party assets. And as we all know, examples of assets, 18-wheelers, wireline trucks, MWD, fishing, root tubing tools, and many drilling equipment. Really, it is usually anything over $5,000 of initial cost. One thing we keep forgetting sometimes when managing assets and inventory is the financial implications. One example we'll see very soon in this webinar is the actual effects that incorrect asset inventory data have on our company's software, its income statement, and its balance sheets. So why is asset management so important? And this is one thing I tell every person I talk to. OFSIX has found at least one missing asset during every single oil field asset count performed. We've found multiple shop trucks in different states, a compressor skid, dozens of dumb iron assets, and even a wireline truck. At OFS Inventory-X, we like to say we guarantee that we'll save you more money than we charge your firm. We're just trying to find your company's resources and value. All right, so this slide is the real cost of incorrect asset management. And we go over 3 points here. Of course, there's multiple others, but we go over loss of revenue for the company, overpaying year-end taxes, and inventory valuation errors. In regards to lost revenue for the company, this goes over operational capacity. Knowing exactly how many assets and inventory you have on a specific location, at a specific shop and a specific yard. I've seen many times where a company says no to a project or is unable to get out assets and inventory to a location because they do not think they have them at the shop, only to realize that they had it at a shop 3 hours away. And that's a very avoidable loss of revenue. Overpaying year-end taxes. This concerns companies that go years and years without performing physical asset inventory counts. One thing we've seen multiple times is a company, for example, show on their income statement and balance sheets $10 million worth of assets and inventory on their books. Well, in a sense, in reality, they really have, let's just say 2 million, but the last time they actually completed a complete asset and inventory count was 5 years ago, and they're paying much more on taxes than they should, and that year-end tax savings is quite a lot. Inventory valuation errors. This is also called fat fingering sometimes, improper import of data, and just a slight error in inventory, let's just say an inventory SKU or an inventory part. If there's 1,000 widgets of that inventory, that could drastically throw off the profit margin, operational capacity, and visibility. And at the bottom, once again, all of these affect a company's decision regarding capital projects, hiring, firing, expenses, selling the company, buying additional divisions, and year-end bonuses. Even if the operations look great from a standpoint of revenue, they could actually be in dire straits. So this is one thing I like to tell companies out there too that is rarely spoken about is loss and missing assets amount to almost $50 billion a year in the U.S. alone. To put that in perspective, the money saved avoiding these costs would pay close to 1 million average U.S. workers' salaries. I guess we've all been at companies where we've experienced equipment, assets, inventory walking off or losing track of the assets when it comes to location, yards, and shops. This slide is called Asset and Inventory Solutions. We go over first-time asset counts, inventory monthly counts, merging data with multiple software, and locating missing assets. One of the services most requested by OFSIX is a first-time asset count completed by a third party, which would be us. Many companies start a software or start a business without completing an initial asset count, and the data is never clean after that. So they really need to get that data clean moving forward to help out operations. Monthly inventory counts, performing regular scheduled audits of assets and inventory creates business in a system that greatly improves operational success, trackability, and reduces failures. Merging data into multiple software, we're going to get into this in a later slide very quickly, But when it comes to merging that data, when it comes to a merger or an acquisition, a consolidation, every single business entity on every side must have a complete and thorough asset inventory count on all location and vendors to ensure profitability and operational success. And locating missing assets, we went over that a little bit in the last slide about losing that $50 billion, but also we have to account for assets in the system when it comes to scrapped assets, removal of assets, and especially the sold assets. There's been a few times where I've seen that assets are sold but not updated in the system, so that that data is incomplete and incorrect. So one thing we wanted to talk about in this webinar is what happens when a company goes through a merger or an acquisition, especially when it comes to the asset and inventory side. When a company is going through a merger and acquisition, it is a necessity that asset and inventory counts are done properly and completely. And a few things to remember when going through an M&A is nomenclature challenges, consideration for possible future challenges, and reporting. Nomenclature challenges, that would involve, we're going to get that to the next slide, but that would when you're importing the data, would be 6.50 inches or would be 6.5 inches. Things to think about. When it comes to reporting about the divisions, is it based on state or region? Would you say Texas or would you say Houston, Texas? Would you say Southeast or would you say Louisiana? What about a resource group? Is it broken up in a way such as wireline versus downhole tools? What about the make and model of heavy duty equipment? These are all things to consider when you're going through these changes. So in these next two slides, this is a very brief and wide overview of a checklist when you're merging data into one software from two or multiple areas of data. And the first step we always like to say is assemble all data, reports, and paperwork. One major problem that occasionally arises is discovering additional part numbers, product lines, and data that were not accounted for in the initial project. We've seen this multiple times, especially when it comes to multiple entities coming together when performed by a accounting and auditory service company that really doesn't have the expertise on the oil field side. Second, combine all data sources into one data set. This would be this allows a visibility of the data's metadata. This would include drop-downs such as size, product line, location. And the reason you want to combine all this data, get all this data together, is to be able to standardize the data. So if this is not properly done, this is where a company may lose data, lose inventory, and lead to multiple issues. Ease of use and data functionality are highly important during this step. Number 4, we complete a full asset and inventory count at all locations. This is done in a timely manner, especially when you are dealing with multiple locations. Things to think about here are equipment and inventory that is continually being shipped in and out of facilities. If you improperly complete this, there might be multiple assets and inventory that might be on location that are not accounted for and might that will lead to bad data. Number 5, clean data, import and verify. Getting the sign-offs from the correct management, the asset manager, the CFO is very important and required before proceeding. We always like to say assets and inventory counts are only as good as the data input performed at the end of the project. And number 6, constant and scheduled review, updating the system's assets and inventory. And we always like to say train, implement, review, train. And we say that because in asset management, especially in regards to the software side, it needs to have constant attention and perpetual training, as most of us all know. So here's a slide with a couple of case studies that OFSIX has actually performed. Company A shows the value of having that complete and accurate asset inventory list. As you can see, Company A was in the process of buying two divisions from a different company, a national service company. That national service company for those two divisions had no current master, asset, or inventory lists. OFSIX had to travel to three locations across Texas. We counted over 200 assets and 500 inventory items. We were able to value the two divisions at $11.3 million, and this was completed in under 2 weeks. Without this knowledge of the assets and inventory items with these two divisions for this national service company, how would that business know the description, location, and the size about going through this merger and acquisition of those two divisions? Company B shows how easy it is to find missing assets. Company B was planning the sale of their entire business to an interested buyer. OFSIX traveled to Texas and Wyoming, Casper, and we were able to count we counted 2.1 FLV and 2.9 OLV. For those who don't know, OLV means orderly liquidation value, and FLV means forced liquidation value, which that means is orderly means you have 6 to 12 months to get the best price for selling those assets. FLV, forced liquidation, would be 2 to 3 months. So that's why there's a differentiation between those values. This whole project was over 1,000 assets, and within those 1,000 assets, over 200 assets were not registered on Company B's asset management software or financials. This is a very good point too when it comes to this, is that those are 200 assets that were never in the ERP system or the asset management system for that company. So they never knew that they had that operational capacity to use those for projects. What if they said no to a project that they actually did have those assets sitting at the yard that they did not know? Q of A, sorry, does anyone have any questions and answers? Before we get to that, I just want to say, in summation, OFS Inventory-X is your asset and inventory management firm that provides your company with third-party inventory management, locating missing trucks and assets, or a true count of all assets and inventory across multiple locations. We are the ones that get our hands dirty across the nation and across oil fields to perform those multiple location physical counts.
So again, thank you, Stephen. Let's keep going, and I'll bring in Michael Maltsev to talk about cycle counting and how it's done in RigER.
Thank you, Nikolai. Thank you, Stephen. Hello, everyone. This is Michael, and let's talk about cycle counting and inventory counting in RigER. First of all, when we talk about cycle counting, we have two major groups of the assets. It will be the fixed assets, which can be treated in RigER as rental units or trucks, and the inventory, so goods, parts, consumables, you name it. And in many cases, the perpetual inventory auditing procedure, which we call the cycle counting, bringing the regular repeated sequences of checks, value, quantities of the different items. In this case, it's a good exercise to run those procedures regularly, because with the big volume of transactions and big volume of the items, it's very easy to miss something. Again, there are two major goals of the cycle counting. Is just to check the physical value of the asset, so it's for balance sheets and for value the cost of the company sometimes, but another purpose is to understand that we properly track all the transactions, because if we have some issues in the system, any system we use, and if some of the type of the transactions not covered for that system, we can easily find it, and as soon as you find it, it will be way better and less harm for the bottom line of the business. So let's talk about the inventory counting results and what kind of scenarios we can have. The most expected scenario is that actual quantity and book quantity equals. So we have no deviation, we have no kind of deficit of surplus, and in this case, we do not need to do. We just confirm that the quantity which we have in books exists in reality. Another scenario when we have a deficit, so when actual quantity less than book quantity. So, and in this case, we need to understand how that happened and what we need to do about this. So again, it could be several decisions regarding this, and it could be a very serious implication for the entire business and operations. Another thing when we have the actual quantity more than book quantity, it looks like it's a good and favor results of the inventory counting, but in my practice, this could cause a lot of problem and lots of issues. It means that we have some discrepancy and some different tracking procedures in reality and in the system. So we need to fix that as well. And another results when we have actual quantity need to be added because those items not in the book, and this is what Stephen just mentioned, when the company not even think about those items and they're happens there. So, and that is why we usually recommend to run the cycle counting from scratch. So what I see is what I put to the inventory sheet. So and this will give in this case it will give us that kind of results, that kind of scenario. Otherwise, if we will provide a book quantities to the users to the responsible person, so in this case they will start counting as from alphabetical order from the kind of another order. So, and in this case, I will probably discuss with Stephen some practical steps how to run the inventory counting in more efficient way. But talking about RigER and how we have this from a document perspective, we have a special document called part counting results, and this document reflects the results of the inventory counting, and we have two documents which can be generated based on the parts counting results. It could be item disposal if we have a deficit, so to correct the particular balance in the books, and initial balances, which we use usually for initial balances, and we use this document for add items to the system. This is what we usually do. So let's consider this, the inventory cycles accounting scenario. So the easiest way is to start the document and put those numbers manually to the system. However, it's not that easy, especially when you have a big list of items and lots of small details which you need to add there. So to run this, we usually start from the inventory on hand report and run this report based on the particular department. After that, we export this to Excel spreadsheet because everyone's loved Excel. And in the Excel, and in many cases, it's easy to spread this. It's easy to provide this information to any responsible person, and then they can fill out this very easily. So they enter inventory counting quantities to those Excel spreadsheets. The next step, we create parts counting result document and import this information from this Excel spreadsheets to that document. After that, in the document, we do several steps. First of all, we fill out the book quantity and compare those actual quantity versus book quantity line by line. We calculate results. I mean, calculating results, we comparing and see if we have deficit or surplus, and we multiply quantity by price and realize the value. Then, in some cases, if we have an approval process from the top management for the cycle accounting results, we need to put a comments for each line and approve the results. And after that, we generate those two documents, initial balances and item disposal. And if we talk about value of the item disposal, usually it's not a problem to find out, but the initial balances, the surplus value, could be an issue. And we use the following algorithm. We use the latest purchase price from PO, the latest PO. If we do not have a PO for that item, we use the initial balance value or kind of the first value which we record in the system. And if we do not have neither the PO nor the initial balance, we will use a zero value for that item. And of course, the user can change the value and add some numbers there, but again, it's after the approval of the management. So let me show you how it looks in RigER and how it works. So I have a short demo recorded, and I will comment this demo. So first of all, we are going to the reports and open inventory on hand report. So you see how many reports we have, and inventory on hand, one of them. We select usually beginning of the day, beginning of the month, and department. So let's run the inventory on hand for Denver. So we have lots of different inventory, and what we do, we export everything to the Excel spreadsheet, and it's pretty easy. So it's very, very simple. So then the actual counting running in Excel, and the next step is to start reflecting the results of this inventory. So we run the document which called parts counting results, create a new document, select department, set a date, and very important, set time when the document will be effective. And then we can import everything from Excel spreadsheet. This is good. Sometimes we can have missing items and we need to go through that, but I skip it right now. And we click calculate results. We have surplus, deficit. So line by line, we can put some comments regarding the reason why we have such a result, and put some notes for the management for future approval or future reference. Based on that, it's very simple. We can understand what needs to be adjusted. We can post the document and generate those two documents, which I mentioned previously, initial balances and item disposals. So the item disposal document will collect all the deficit which we have and put the total result for the inventory, and same thing we will have for the initial balances, so that all the surplus will be reflected in the initial balance document. Some organizations require approval of the parts counting results, and we have that option. We use this through the statuses. That's probably everything for part counting results. This is a very simple and very effective process in RigER. Usually, again, our clients use those documents regularly, like every single month. they run parse results and run two or one, depending on what kind of cases you have, scenarios you have, additional documents which correct the actual balance and book balance. So let me talk about the best practices and what we see from our experience regarding the inventory counting. First of all, I'd like to support Stephen's ideas about standardization and unifications of the inventory. It's very important and sometimes a very complex problem. Say, I can give you an example. We had several clients with same problem, face the same problems when you have allocated business and you have several suppliers for different regions, so the same parts, and those suppliers usually have the different unit numbers, part numbers, and in this case it's very tough to make a decision which part number you will use for your own operations, in some organizations they assign the primary vendor and use their part numbers nomenclature, or they develop their own part numbering. So again, pros and cons for each of that. We support in RigER, we support a multi-part number environment when you can assign a different part number for different vendor and have a general part number which we'll use internally. And for all the POs, we use a particular vendor part number. So convert that, our part number, to the vendor part number. And unification and of the inventory is helpful as well, because everyone in the company should know the name, the right name of each part, because different parts can be named differently, and it should be a one name in the entire database, because sometimes it could cause an extra spending of purchases of parts with different names. Next thing, convenient organized market inventory storage. It's more organizational tool, not from our control and but what we see, most of the clients who think about how to organize, how to mark the inventory storage, they perform better and faster, and spend less time for tracking inventory to like less transactional cost for that movements. Another thing which we see, use the smartphones and tablets for inventory counting. When you can eliminate a paper stage and write down, put the information directly to the digital format, and again, this is speed up the process dramatically. Another thing which we see and which our client use, it's barcoding. Barcoding for, especially for the small parts, when you can put barcode not for each particular individual part, but you can put barcode to the box or being, and in this will give you the fast way how you can run the inventory counting, scanning barcode and enter quantities. Next step, again, using technology is number one best practice, but I believe that RFID technology will give us a huge boost of the entire oilfield rentals business, and we see this technology as a future thing. Another more practical more practical approach is use pictures in the software. RigER allowed you to upload pictures of the particular item, which will educate users, which will educate people, so they can compare and understand how the things looks like. Because in sometimes people do not even see what they do, and if they use only the computer, they need to have this information there. Another practical thing is a color coding. It could be a different color tags showing different status of the unit, or different types of the unit you can coloring. We see that widely used in oil field. Say, for example, different frac stack of different well coloring different color. And if you have a multi-well pad, the guys easily direct you to the right to the right color. So they tell like the yellow well or red well or blue well. It will be very easily. So you can use the same approach for the inventory and make that process faster and efficient. Another thing, again, it's more organizational and systematic approach to track all the movements. It's usually in the oil field when and it's common question how you track the parts and the inventory in the truck. So that moment when you have a movement from the yard, from the shop to the field, and consume part of this in the field. So that kind of movement from yard, from shop to truck, and from truck to field, those movements preferably to be tracked in the system. Otherwise, it will cause lots of misleading investigation and losing of the items in reality. And the last but not least recommendation: have the dedicated team of the cycle for the cycle counting. Again, it could be your internal team, or it could be Steven team, the team which will help you to run and move through this complex process efficiently and faster. Definitely the dedicated team, the people who understand how the things looks like, what kind of approach you can use for a faster counting, and have a proper tool for counting as well. So those my best practices which we can share today with you. So thank you so much, Steven, and I'm looking forward for the future projects together.
I can't wait. I could not be more proud to be a partner, and I would love to be able to help out RigER in any way when it comes to the customer saving money, finding assets, and building these businesses up the way they should be. And thank you so much for your time.
Thank you so much, Steven. I have no doubt that we will have a great client next couple of weeks. So and definitely we will sit down in Midland in 2 weeks and work together on the big new project. So thank you so much.
Fantastic.
Thank you, guys, and have a great the rest of the day.
Yeah. So one thing which I'd like to mention, our next webinar will be next week, same time, and we will talk about European RigER integration, so complex integration processes, and how we create this, what kind of the integration point we will use, the scope of work and best practices. So please join us next week. And if you have any questions or would like to see the full demo of RigER, please reach us out, calling web, book a demo, and we'll chat. Thank you so much, and have a fantastic week, and talk to you next week.